Chris Robinson, do you see corporates disintermediating banks as a trend? If so, what steps are corporate treasurers putting in place to partner with FinTechs?
Disintermediation is a strong word. What corporates are really looking to do is to find new solutions to use the new technology. Banks still add core value in terms of providing accounts, interest, access to the payments infrastructure. Where corporates can use FinTech to disintermediate functions, using ERP for in-house cash solutions, so I can do things with my own internal bank accounts, so I don't need to use electronic banking. I can provide that through ERP directly to my own subsidiaries. I can intermediate through procurement systems. So systems like Coupa, where procurement can be done electronically. And they offer opportunities to be able to embed supply chain finance, virtual credit card solutions, and particularly on supply chain finance, there are multi-bank opportunities where they can bid for financing certain invoice transactions. What does that mean to me as a treasury? I have to work a lot closer with my procurement group as opposed to accounts payable. I still need to obviously pay the suppliers and provide the funding to make that happen. But we're seeing new technologies and potentially working with different banks that have the embedded capabilities with the FinTechs. Will some of the FinTechs succeed? Some will, many won't. Because the banks are seeing FinTech as a bit like an innovation lab, a cheaper way to invest in multiple options to see who will win, who will fail. They're looking at equity as a way to be able to capture the early advantage. But as a treasurer, I'm quite conservative about FinTechs. They have the habit of having a great idea. Will it still be there in 5 years if I build it into my core process? So treasury is more about evolution rather than revolution. And I typically don't want to be at the front of the curve. I know some treasurers do that, but most treasurers will want to wait and see. So I come back to this coherent ERP strategy, externalizing my ERP across the cloud. So things like Ariba, where I can connect my ERP to my customers' or suppliers' ERP systems. And FinTechs can be enablers of that. So I see FinTech as an enabling technology for mobile, for access to the cloud, provided they can address the security, reliability issues that I would expect from a big company as a multinational working with a very small FinTech.
So what tips would you give to corporate treasurers in that case?
I would say look at my treasury strategy of how I've moved in ERP to be able to do more things in my own accounting processes and with my own TMS system, and doing less with banks. So less electronic banking, definitely less liquidity solutions. That's for the top 25, 30 currencies. I would talk closely with my procurement managers, particularly as people setting up procurement hubs. What does that mean for the payments flow? How will I interact with that part of the corporation? And the third tip, look at where I can mobile enable parts of my treasury to externalize to make data more visible.